My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey, folks, welcome back. Today, zooming in from Houston, Texas, we've got a real estate entrepreneur and former oil guy, Casey Gregersen. And Casey has done a lot of very interesting things. He spent over a decade in corporate America working with Shell in the oil industry. He's very familiar with our neck of the woods up here in Canada, spent a lot of time in Alberta. He's based out of Houston, Texas, doesn't get much more oil country than that. And he's also a very accomplished real estate entrepreneur. And he's done a number of different things. Together with his wife, they also have quite a bit of experience working with franchises. So what we're going to be talking about here today with Casey is something a little bit different. We're going to be talking about how to scale your real estate investing business responsibly so the wheels don't go off the train, so you keep things chugging along, and so that you do it in the most efficient way. And I think Casey brings a lot of great experience, corporate life, from franchising to his real estate investing business. So Casey, welcome to the show. Great to have you.
I am excited to be on. Thank you, Dave.
My pleasure. So Casey, to get started with, why don't you give us a little snapshot of what does real estate investing look like for you at the time that we're recording this? It's the beginning of 2025. What do you focus on these days primarily?
You bet, Dave. We got about 250 units now in our portfolio, about $25 to $30 million of assets under management. And the thing I'm probably most proud of is we have a vertically integrated company that have taken years to build, and I'm sure we'll get into kind of how we scaled that. But it's we have a direct-to-seller company, wyohouses.com, where we get all our leads from. We do in-house construction because contractors and that part is always, I think, the riskiest part of real estate, to be honest. And the third thing we do is we do property management to manage our portfolio. So today, we manage our units. Our goal in 2025 is to do 100 transactions. So that's a combination of fix and flips, seller finance, sub-twos, novations, buying more rentals. A little bit of everything because ultimately, as we were talking earlier, when I'm working with a seller, I want to have multiple tools in my tool belt so we can ultimately help solve their problem.
So Casey, the 250 units or doors that you currently have, give or take, like what percentage are multifamily, what percentage are single family? And if you kind of these days looked at a pie chart of your business, what chunk corresponds to buy and hold, multi, buy and hold, single, creative type deals, that sort of thing?
You bet. I would say probably at this point, it's probably still around 50-50 between our multifamily properties and our like more like single family duplex stuff. It skews it a little bit when we've got a 66 unit and like a 45 unit. But we've recently added those over the last 2 to 3 years, and that's definitely changed the business for us because it's very scalable, right? When instead of doing, for example, I bought a 66 unit and we probably rehabbed, I bet 30 of those we rehabbed. And for me to go do 30 fix and flips and have contractors going every which way would have taken, it would have been like a full year and probably used all 4 crews, right? But I had one crew doing it. So that's kind of that ratio. And then when it comes to actually how we take deals down, this one's pretty crazy. And I've run the math on the numbers in the last year. Over 90% of our deals that we now buy, we use some form of creative finance. And this really was birthed from the interest rates going way up, right? Is to where it was you can't, and people watching this today are probably like, I want to get in real estate, but I can't make a deal pencil because I'm borrowing at 7-8%, maybe 9 or 10, right? So what we do is a lot of times I'll take over the seller's current financing or the best scenario is when they own it free and clear. And then I can structure a deal to pay them over time, even pay them interest. And then I can still make the deal pencil for me. So I would say 90% of our deals are that. And then only about 10% are like a traditional like cash offer.
All right. And are you doing these creative type deals primarily with single family homes, or do you find some good multifamily opportunities in that space too?
Yeah, that's the cool part is we do both. And one might think that it's easier on a single family. And we definitely do quite a few. I would say there's more creative strategies when it comes to single family. But the cool thing about multifamily is you're dealing with a bigger asset and a lot of times a more sophisticated buyer. And it's kind of cool. Like, for example, capital gains, there are some really cool creative strategies that I could do with my multifamily sellers where they're actually like, yeah, we would prefer to seller finance this because if we sell it all at once, we're going to take a big capital gains hit.
Yeah.
Versus if we sell it to you over time, you stretch it out and you reduce your capital gains. So we do it on both.
Nice. Smart, smart, smart. All right. Well, you touched on earlier some that magic term that you've got a vertically integrated company. And sounds like you guys do all sorts of great things. I imagine you didn't start off with a vertically integrated company. I imagine this is something that you've developed over time. And maybe you can kind of help connect the dots for me. So what did you take from your corporate experience and the work that you and your wife have done with franchises and how have you applied that to your real estate investing business?
You bet. I mean, one of the best things I've done is yeah, working in corporate America, I realized that A, it wasn't for me for the rest of my life, right? But it taught me a ton and especially as an engineer and working in oil and gas and I worked for a big company like Shell, and there was a lot of structure, which I do things a lot differently, but some things I still do is like SOPs and systems, right?
Mm-hmm.
One of my favorite books I read, and it was during COVID, was 4 Hour Work Week. And he
Yeah.
talks about like systems and virtual assistants. So one system I built was I manage I have these 250 units now, right? So I'm still my own property manager, but I don't do it. I actually have virtual assistants across the world who manage all that, and they just coordinate with my contractors on the ground. So that was just an example of like building a system to where I didn't have to be doing the day to day. The cool thing is I just get an update from my COO every week on, hey, how are things going? Where do I need to support as we grow? Um,
Mm-hmm.
and yeah, and then so that's one example. The other thing I would share is by like owning the franchises. So this might shock people, but being trained as an engineer, I didn't get a bunch of training on marketing and sales, right? So that
No,
was,
no surprise there
yep,
whatsoever. Yeah.
yep.
Most MBAs don't get a hell of a lot of
That
practical training on marketing and sales either.
That's right. And I remember when I first read Rich Dad Poor Dad, which is one of like for me, like a lot of other people, it was a light bulb moment reading
Yeah.
that. But I remember I always tell this story. I remember vividly him talking about like doing marketing and door-to-door sales. And it was something I never learned until I bought our first franchise, which was a Pure Bar franchise, and we opened one in Midland, Texas. We literally opened this store from the ground up.
Sorry, what kind of a franchise? I haven't heard of that one. What is it?
Yeah, it's called Pure Bar. It's similar to like Pilates. It's a
Oh,
boutiques fitness for women.
got it. Got it.
Yep. So my wife loved it, right? And once I would, when she came home that first time after doing her first class, she was so in love with it. I'm like, this is perfect for you. And I thought it was a cool, scalable model. And yeah, so we decided to open one in Midland, Texas, of all places. And it was great. It was a market that really needed it. But I had never sold or done marketing. And it was basically baptism by fire. We had to go in there and quickly, it's amazing how fast you learn how to sell when it's like your business on the line and it's kind of sink or swim. So that taught me a ton of like how to do the marketing, how to do the sales, how to do payroll, manage a team. And then what I really was able to do is I was able to parlay that knowledge, right? We don't own those franchises today, but it taught me a ton. But what I was able to do is I took all that sales and marketing and I applied that in my real estate company to where now we use those same strategies to go find more off-market properties and find more acquisitions, right? And build my team. So it's kind of parlaying all that together is it's ultimately let's let us scale to where we're at today.
Yeah, most definitely. So you've got lots of different moving parts with your business, Casey. So you've got the lead generation where you're finding ideally motivated sellers or sellers with equity or sellers who are willing to do creative type deals. You've got, team management and recruiting and, taking care of all the different crews that you've got doing construction type stuff. You've got property management outsourced to a lot of VAs or several VAs in different places. Then you got the financial side of things, raising capital to do all these deals. There's a lot of different things going on. So maybe we'll just take a look at a couple of those. So these days, when it comes to lead generation for sellers, what's working best for you and your company?
You bet. We've always done multiple marketing channels, right? So I've learned this from a lot of other masterminds and mentors of mine. Like you don't want to just do, for example, we do texting, we do cold calling. I have our SEO and website. We do Facebook ads. We've done radio ads. We still do direct mail. That's one of our best ones still to this day. In a place like Wyoming, where there's not a whole lot of other people doing what I do, If we send postcards, you'd be blown away by the response we get when we send out a postcard campaign of how many people reach out and they're like, "Yeah, I mean, tell me more, Casey. How would you buy my house for cash, or how does this work?" And then we're able to get on the phone, and those are probably my favorite deals because they come to us and they're like, we're solving their problem, right?
Mm.
And so yeah, that's kind of the main ways we do the deals. But I've got a full team of like of virtual assistants who help do the texting and calling, to like lead managers who like are managing scheduling appointments. And now, actually, in 2025, I've been kind of stepping out of the acquisitions or closing seat and moving other people in because my goals, as I mentioned, want to do 100 deals this year. And for me to do that, I've got to be raising capital and working in other parts of the company. So I've got 3 or 4 different people that they're the ones like making offers, helping solve people's problems. And then when they get stuck, that's when they bring me in and be like, "Hey, Casey, I'm not sure how to solve this problem. What do you think we could do?"
Nice, 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 nice. All right. So that's, and then what's been your takeaway and your learning? It sounds like you got multiple crews, boots on the ground, doing construction stuff. Is that in multiple markets, or are they all fairly central? It sounds, because you're in Texas, you're talking about investing in Wyoming. Do you have a pretty broad spectrum of market areas that you're working in, or how's that work?
You bet. And a lot of people are probably like, "What? How is this guy live in Houston and invest in Wyoming?" Right? Obviously, I grew up there and know the market. But the second biggest thing is I've got, and the reason I could scale it is I've got 4 different crews. And they're, to answer your question, we're spread out from the northern part. I have one in the central, we have one in the south, and now we have one in the southwest part of the state. So they can kind of move around and support different areas. I'm actually looking to recruit a 5th crew because the funny thing, I was just on a call right before this talking about another area, Wyoming, where it's actually hard. People are struggling to fix and flip. There's properties that need to be renovated and the demand is there, but there's just no contractors, right? And the
Mm.
ones that are, the contractors that are there are either 3 to 6, 12 months out. And anybody who is available, like you can't, you're going to probably pay, you're probably going to pay that guy and then have to come pay the other guy to come fix it.
You go fix it.
Right.
Yeah, yeah, that's a
Yeah.
common story. Okay, cool. So everything that you do is in Wyoming. Is it, am I understanding that correctly?
Yeah, and
Okay.
we do the surrounding states. We do Montana and South Dakota and a little bit Nebraska now too. So we're kind of branching out, but that's the core market where we've got the boots on the ground. It's kind of our own little niche market.
All of these crews, are these full-time employees for your company, or are they kind of outsourced crews that give you preference?
It is a mix of both. We've
Yeah.
decided to bring in, like, I have a team lead in each of those 4 areas. When I say 4 crews, we got a team lead that's like, typically those guys are, some of our 1099 W2, depending on if they do other work, but a
Mhm.
good share of them are actually our W2 guys and they just do our jobs. And that was one of the things I did as soon as I had enough fix and flips and rental properties going to support like one full-time person. That's exactly what I did because now, man, as you can imagine, managing all those rentals, if I've got a in-house W2 guy that I can send out to do these jobs, makes things a lot easier. And then what
Mhm.
he's done is he's hired other crew members to where each one of those team leads runs about between, I'd say, 4 to 7 other like day laborers, or he'll find the subcontractors.
Yeah.
But yeah, we all told we have about 43 people total between the sales company, the marketing, and the property management and our construction teams.
Nice. That's beautiful. And how long have you been doing this for full time, Casey?
You bet. Just 2 years, a little over 2 years ago, I left my shell job, which was I had a really cool gig where I worked for three. You'll love this. I worked for 3 weeks in the office here in Houston, like 5 minutes from the house. I'm pointing right back here. It's really
Yeah.
close. And then I would have 21 days off, and then I could, and that was allowing me to keep growing in real estate. But the kicker was I would go in at 2 p.m. and I would get off at 2 a.m. Right. So
Mm.
my kids were already at school. And by the time I went to work, they were still at school. So I completely missed them. And I've got 4 boys and I love like coaching them and I was missing all those important moments. Right. So that
Yeah.
was what led me to I had scaled this real estate company. Yeah. Could I have played it safer and just kept that W2 going? I mean, like a lot of other people, yes. But ultimately, I'm like, I'm not going to miss these moments. And my real estate company was really taking off and it was taking more of my time anyway.
Nice. No, that's beautiful. Beautiful. All right. The other big piece of the puzzle is the raising capital side of things. So you're going great guns. That requires a pretty consistent injection of cash, even if you are doing a lot of sub to and creative financing type deals. You got to come up with money down payments and deposits and then renovations and all that kind of stuff. What are you typically doing for capital for your projects?
You bet. And the way I explain it, it's a double-edged sword in Wyoming, right? The good and the bad. So the good, as I've told you guys, low competition. I'm one of the only ones doing it. I'm the only one who's got an integrated company that can find the deal, fix it up, and rent it out. But the flip side is it's more difficult. I would love to do more wholesales, like a lot of other people do, where like, okay, I'll give you quick math. If I'm doing 100 deals this year, I would say 20 of those, 20 to 25 of them will probably be wholesale deals where I just find the deal and I quickly sell it. Right.
Mm-hmm.
But because it's the kind of the downside, if you want to call it, but I honestly think it's still an advantage, is I have to take down a lot of these deals myself to where there's not a fix and flipper that's got contractors that can go do what I do. So
Right.
as by default, or maybe by design, we've built out our crews to do more deals. So it becomes very capital intensive for us to go flip. Let's say out of the 100 deals, I'm going to go flip 60 of them this year, right? So we've got the crews and we've got the manpower to do it. But yes, as you said, Dave, it's very capital intensive. So that's where our fund comes into play. And we work with limited partners two ways, right? The simplest way is we just do straight debt deals where the lender or the private money lender, I like to call them, they are a lender on a specific deal, or maybe they'll be spread out across multiple deals and cross collateralized. That's the simplest way we do it. And we typically pay between 10 to 12% for those. And then the second way we work is like we'll go bundle up. Like I just did this at the end of last year for some tax purposes it was for my investors because they had really successful years the previous year. And what I did is I bundled up about 10 properties. We moved it in as an equity play within my fund, and we rolled that all in, sold the properties to the fund, and now we're going to keep those as a buy and hold for the next 5 years, and then look to exit then, and we'll either trade up to some bigger stuff or we can liquidate and do another portfolio.
Very, very cool. And what do you find is working best for you coming from your background, especially in oil and gas? You've rubbed shoulders with a lot of high income type people. What do you find works best for you with connecting with private money lenders these days?
Yeah, this is why I do so much stuff on my YouTube channel and Instagram and Facebook. And some people are like, oh, I can't believe you put yourself out there so much. But I just love because it's time consuming. I spend a lot of time and energy and money to do it. But I'm able to communicate and talk to those people that I used to work with. I mean, there's only so much time in a day, right? And I've got 4 kids and a busy family and businesses to run. But when I take the time to create the content and share it, like I'm able to stay in front of these people and I'm having this, I love it because I'm having this conversation with them while I'm asleep or while I'm working, right, through my social media. And what's really cool is a lot of those people will come and reach out and they'll book a meeting with me. And then we can dive in and start talking about, hey, like, well, what are your goals? Like, are you trying to create, do you want to be a fix and flipper and go make the big margins I make and do all the work I want to do? Or do you want to just be really passive and just put your money to work and not have to realize it all? I just love doing those calls and especially talking to, I mean, any profession, but especially the oil and gas people where I've sat in their shoes and I know what it's like. And I know what it's like to go through the layoffs. I know what it's like being in an industry that's very volatile. I know, like the guys in the field, I know what it's like being away from your family. So that's where you can see the passion coming through, but that's where I really love connecting with those people and ultimately helping them create their financial freedom.
Beautiful. Casey, if people want to connect with you and find out more about what you're up to, where should they go?
You bet. Just go to my website or any of the social media. It's really easy to find. Just spell my name. You just got to spell Casey Gregersen with all E's and you'll find me. So CaseyGregersen.com. Yeah, go on the website and let's connect.
Awesome. Casey, thanks for being on the show. This has been a lot of fun.
You bet. Thanks, Dave.
All right, everybody, take care. We'll see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.